Hello fellow investors, my name is Lawrence and thank you so much for watching my channel, a channel that talks about investing in stock market and also talks about financial independence. If you haven't subscribed, please consider subscribing so that you don't miss other videos of mine. Recently, we have made several videos regarding about investing in stock market. We have done how you can invest in stock market, the basics of investing in stock market, and also how you can analyze a stock. Actually, I went ahead to do specifically how you can invest in Ugandan stock market, how you can invest in Kenyan stock market, and also how you can invest in Dar es Salaam Stock Exchange. And also made actually the general video on how you can start investing in stock market if you're in other parts of the world. Recently, I was doing my own research and going through the other companies that I'm interested in, and I found out this incredible stock that anyone who is interested in investing should look at it. Actually, before I start analyzing it, I want to make a disclaimer that I'm not licensed financial advisor. So what I'm talking about here is only for entertaining purposes, and you shouldn't take it to be your final decision. You should make your own decision before you start investing or you go to buy shares. So let us begin. The stock that I'm talking about is Stanbic Bank Uganda. So why Stanbic Bank Uganda? Mainly, I'm going to talk about it. I'm going to do some small introduction about it and do some fundamental analysis, which are looking at the figures, and also I look at the outlook. So I'm going to be talking about three sections. So let us begin by talking about Stanbic Bank Uganda briefly. Stanbic Bank Uganda is the largest bank in Uganda by assets and also by branches. Stanbic Bank Uganda, it has up to 1.5 billion US dollars of assets and also over 80 branches in Uganda. Another thing to note about Stanbic Bank Uganda is that it commands over 20% of market share in terms of banking. So it takes 20% and the rest takes 80%. So if you see that another second banking bank that is second to Stanbic Bank, it has only 12%. So you can see it is very far ahead in terms of market share, and that is very good in terms of competitive advantage. Another thing to note about Stanbic Bank Uganda that it is owned by the Standard Bank Group of South Africa, which is the largest banking group in Africa in terms of assets, and also that one gives its advantage. When it gets an opportunity, it can always take advantage because it has a large asset pool. So that's briefly about the Stanbic Bank Uganda. So let us go directly into its numbers. I'll first talk about why I am interested in Stanbic Bank Uganda. Recently, actually late last year, it was trading between 33 to 30, and as I record this video, it's about 24. So if you see that difference, it has declined by over 30%, which is incredible. But if you look into what has made it decline, fundamentally, you will not find anything. Maybe what I can speculatively say is that currently in Uganda, the political environment is starting to hit. And in East Africa, as I can say, maybe the reason or what I can say about what has caused the decline, I can speculate that maybe it could be because of the politics, because now it's in Uganda, its political environment has started heating up, and most of the politics in Uganda are commercial. And what is surprising, you may find that some people can sell stocks to invest in politics. So I'm not very sure, but I'm just speculating, because fundamentally, if you see its fundamentals, there is nothing that has changed fundamentally to make it decline by over 30%. So that's what I could speculate. Directly, let's go into numbers. At the moment, as I record this video, it's trading at 24 Ugandan shillings, and its equity, it's around 956 billion Ugandan shillings, and when it goes to shares, it's about 51.2 billion shares. Number one ratio that I analyzed was price to earnings ratio, and I found out that it was 3.6. And on average, when you see the average banking industry, it has 80. 80. So when you see, it is almost a half of the average, which is very incredible. That is number one ratio. The second ratio that I looked at was return on investment. I took an average of 5 years, and I found out that it was 27%, which is very incredible, because every money that you put in, it means it gives you a return of 27. So over a period of 5 years, it has been incredible. I can say it has been very, very satisfactory. That is another second ratio that I looked at. Another third ratio that I looked at was payout ratio. Payout ratio, which was 36 also %. It means every profit that they get, they only pay 36%, and the rest of the money is put into development, which is very good, because when it comes to paying dividends, it doesn't have difficulties, as it pays less, and at the same time it can develop. So another ratio that I looked at was dividend yield, which is 7.9%. Actually, you can, even if you dividend investor like me, you can just simply go and invest in it for dividends, because 7.9, there are very few vehicles that you can get that gives you 7.9%, and also 7.9%, it beats inflation, because in Uganda inflation is between 5 to 7. So if you put your money in Stanbic Bank, invest in Stanbic Bank, it gives you 7.9 as a dividend yield, which is very good. And actually every year, sometimes after 2 years every year, it normally increases its dividend by maybe 16 to 18. So you are sure that maybe in 1 to 2 years it can increase. Another thing that I looked at was price to book ratio, and it was 1.2, and when I also researched about the average price to book ratio was 2.4. It is also below by half, which is very, very good. Myself, the price to book ratio that I normally consider very good, as because I follow Ben Graham, the father of value investing. He says when you want to invest in a company, at least the price to book ratio should not exceed 33%. So it's below my standards, because price to book ratio of 1.2, it gives me around 28%, which is very good to me. So that was those were my ratios that I looked at when I was trying to evaluate the fundamentals of Stanbic Bank, and I found out to be very good according to my analysis. Actually, there are very many ratios that many people consider, but for me, those are the ratios that I consider important to me. So let us go to also the macroeconomics, or the outlook of Stanbic Bank. Number one is, as I said before, Stanbic Bank has a big competitive advantage, as it commands 20% share in the market. Actually, when you talk of the banking in Uganda, what comes to my mind, to mind of every Ugandan, who will think of Stanbic Bank before going to any other person? That's how Stanbic Bank it is in Uganda. So that is one. It has a very big competitive advantage compared to other banks. Second thing you should look at is, actually I was surprised. I was looking at the banking statistics in Uganda. I found out that only 13 million people have accounts in the bank, and out of 43 million people, that commands around 28%. And actually most of the bank accounts, you can find even that 70% of the bank accounts out of 13 million, they are inactive. In other words, they are not active. So you find the true active accounts, you can find like there are 7 or 8 million people. So what does this say? It means it provides a very good opportunity for growth in the banking industry, because as Uganda is a youthful country, as people grow, as the youth grow, they will open accounts, they will get jobs also, and start banking. So that's also another advantage to look at it, because in the future many people will be banking, many people will be transacting, many people will be doing business. So it's also, when you look at the future of Stanbic Bank, it is also a plus. Another thing to look at is the growth. Uganda economy is growing, and in growth, of course, you need the capital to finance your projects, and the Stanbic Bank, as it has more capital, it takes that advantage to sponsor, be it government projects, be it private owned small enterprises. So that one, Uganda actually is one of the fastest growing economies in East Africa. Therefore, the more it grows, the more Stanbic Bank will get opportunity to run out its finance to people, therefore making more profits. Those were my points about Stanbic Bank, and as I said, I will remind you, please make your own research before going to invest in any stock, not only Stanbic Bank, but make your analysis, make your own conclusion. Therefore, you can go in stock market while you're informed. Thank you for watching once again, and if you haven't subscribed, please consider subscribing such that you don't miss my videos. Thank you for watching once again. Have a good day. Bye bye.